Hey guys, what's up? So Saturday market breakdown, and yeah, the week ahead is looking pretty nice. So I have quite a lot of pairs on here at the moment. There was quite a lot of filtering going on. I could have easily slipped on something like EG, which is still a possibility, but I think I'm going to give it another week just to kind of develop a little bit further. But I'll go through the ones that I didn't filter in as well. So essentially for this week ahead, what I am looking at is for the DXY, we can see that, we are within this channel, and it's very possible if we just zoom in a little bit into this area here, we can see on the 1 hour that price is on its decline at the moment, but overall we are in a bullish trend. It's just we've correctively sort of moved higher and then we're pulling back down, and we are in a larger correction now. In a sense, the middle section has been complete, but it doesn't necessarily mean that, we just go from there. Sometimes it means that sometimes we can still be a little bit corrective because we are in that corrective section. And I think that's what we're really anticipating at this section. And when I go back to the 4, at first I was thinking, okay, there's the possibility that we could get something a little bit more complex, but I think when I was just looking at something like that, I was like, the angle's not really the one for me. And even something like that's not impossible, but I just think if we're looking at it for what it is, this makes sense, where we have a 1 2 3 first touch, second touch, mini second section here. So this kind of works as the overall second touch with a mini arcing double bottom, but at an angle, which works with the trend line. And then we're basically playing that. I wasn't really in favor of evolving this structure as well, because we can see that clearly we are moving into that value area from this. So when I was then looking at areas where we could reverse, I'm just going to invert the chart. As we can see that there is this little hook point, which isn't the highest of probability, so you wouldn't be risk entering in this area. You'd essentially be waiting for a reaction from that area, but what we can see here is that we have this little hook point here, and if we can tap into that and reverse, then we may see counter related pairs also reverse. So that's what we're kind of looking at. So essentially I just want to see how price responds to these areas, and then if we do get a reaction to it, potentially we could actually see it then reverse, because we're not just playing the reaction of this, and we don't usually trade trend lines a huge amount, but in this scenario it does add an extra confluence where it does line up with everything. And if we get a solid push away in an insurance entry, then it will be clear as day on all of the related / counter related pairs. So that's the thought process behind the DXY for the week ahead. If we do end up pushing through, then definitely these areas here would be where we would pay attention to. I don't think this is the point where we're just going to start selling off dramatically. I mean, it's possible, but it's not very probable at this point. I think we're just pulling back at this point to just kind of tap into these areas to then potentially just get the angle of this larger structure and continue higher. And we'll get a clear message, because if we then move from this sort of corrective price action into an impulsive price action, we may just get a very impulsive run to the upside. Next week we do have a little bit of news ahead of us as well. We have some CPI as well, so something to be very mindful of for the 11th, in inflation rates. Then we had a speech from Fed Chair Powell and a testimony as well, so something to just be mindful of. Of course, the nice thing is if we can get positioned early on in the week, then going into those days of news, we may move significantly away from it, and we could potentially hold through the news. Not always the most recommended, depends on yourself's position, situationally and whatnot, but just really one of those ones. I mean, the odds are, if we do get the solid push away, you will most probably get the correction into these newses and you'd stay out. So it's something that you need to bear in mind, that you'd want to get positioned prior to news or after news. Usually after news is the safest bet, but prior to news, if you can get positioned well enough, and then price moves away significantly, and let's say it's up here, you're positioned down here. If you want to take that risk, you know that you won't take significant slippage, because even if price did dip, it's unlikely that it's going to tag you out, and you're going to take slippage. But just one of those things to bear in mind. S&P 500 is definitely on its upside movement, as we can see, as we anticipated. We are in a very bullish run. The nice thing about this is that there was plenty of opportunity, and it was very clean and clear. There was news that triggered this as well, so just bear that in mind. But overall you could have actually traded this and understood it fully. I think it was ISM which ended up starting this run, but anyway, remember, news creates volatility, not direction. So then, yeah, we had this, and it just lined with structure. So all in all, that was pretty good. And then we can see that we had another correction there, and it just moves. And once again, it's even if you miss this, you know, if you were sharp enough, you could have still capitalized on something like that. Obviously, this one didn't quite completely fill, but you did just about get the override. So yeah, there was still trades everywhere. I mean, it's one of those ones where you'd have to really just be confident in trusting the pair and understand how it works and functions, and you'd be able to capitalize. JP225 is a very, very interesting one, because now what we've done is we've tapped into the value area. So the real question we have now is, how do we respond from this area? The most interesting thing that we can see here is that even though we had this and we pushed away, we came back up, corrective, we created the middle section here and we impulsed. And then when you measure that, it pretty much aligns itself up into these areas. So even if this does extend a little bit more, that's completely fine. What we want to see is a complete push back in, perhaps maybe engulfing a few of these 4-hour corrective candles, pushes up, and then when it really comes back in and starts giving you continuation, that will lower the risk naturally, and you'll be able to take a trade in them areas to actually trade that. But just bear in mind with the Japanese yen is the Japanese yen is it can still extend and keep going further to the upside. So even if you don't get it, I wouldn't put all my eggs in one basket on just risk entering or taking an entry in here, because as we know with these yen pairs, they do tend to just keep going, right? And that's obviously a possibility as well, but this is pretty much a no trade zone in my opinion, because you're just asking to get tagged in and out. You know, even if you go long and that happens, you may take a loss on that, or you might even take a break even or slippage. And then even if you try to go short, you know, it could push up higher, and then even if it came down here and you just took a risk entry there, it could still do that and then create this and then continue to the upside, and the next thing you know, you have this large continuation. So there's a few variations of what could actually potentially happen, and I'm not just looking at the shorts, I am still looking at the longs as well, but I'm still fully aware that this is a highly probable trade, and if we do get something like this, because we're high up in the run, it's most likely to just really impulse and kind of send price away. Obviously, doesn't usually tend to be as clean as this. Usually we do tend to see stuff a little bit more steep. It just happens to be one of the characteristics that I'm seeing over the course. But all in all, if I saw something like this, I'm just trying to grab a tool, right, and invert that mirror. So if I saw something like that, I wouldn't really say no to it. Maybe not this one. Yeah, and I'll just flip it and then mirror it. Yeah, something like that. I'm happy with that, to be honest. I think that's not too steep. That makes sense. And something like this would look pretty common on this particular pair, and you could take the trade like that. So overall, I mean, I'm happy with that type of trade. That kind of just fits everything that I'm looking for. So I'll be waiting for something like that. Deliberate, clear, straight to the point, and low risk. Overall, this could still extend, so just bear that in mind. Going into the top 6 now, so I'm trying to lower the risk as much as possible on this. Now, I wouldn't really be married to these trend lines that I've drawn here. I'll just be aware that that's a possibility where we have that trend, as we've seen with the DXY, and we're coming in to tap into that. So how would we be looking at it on the DXY? Well, similar thing. The Euro USD might extend a little bit further with a little bit more impulse than the DXY, and that's completely fine. But then at the same time, just looking at it, as the DXY does extend, we may see this pretty much push up and then tap into these areas, maybe even line up with these areas here before we sell. So, and then what we would really be looking at that point there is this, and I think that is a much more better forecast. Obviously, in terms of entry, you would then say, okay, do you know what, I understand that that's there, but I'm not going to get married or sucked into that. I'm going to really focus on this area because this is more higher probability. It makes sense with the DXY, and then you'd shift your focus to here and avoid any losses in those areas, because even if it did push away and give you a small continuation, with all the news here, it could just really just impulse up against you and you just take a break even. So I think the best thing to do is just be patient and wait for these areas, and then let price do whatever it has to do down here, get messy, you know, whatever, and then eventually it comes, makes its way back up, and then it's up here, and then maybe even it will respect the trend line, whatever, it doesn't have to. And then when you get these trades, this is where you want to be getting positioned for shorts. And I think if you have the mental patience to sit through this, which obviously could take a week because it is what it is, you could then make abundance of capital on the way down here, because what you do have, if you look at it on the daily, is you have this 1, 2, 3 of this trend line coming in for this descending larger bull flag to continue higher, which makes sense with the DXY because we're essentially looking at this to go long to then go short. So we're looking at this to go long to then go short. And then we're looking at this to basically tap into these areas to then go short, so we can go long, which works in line with the inverse of the DXY. So we'll see similar sort of stuff across the board with a lot of these pairs, but if we can get something like that, we'll be positioned pretty well for the long. In fact, this 1, 2, 3 may not even get respected. We may get something a little bit more internal and see it like that into the override and then sell, because I think looking at how the DXY is positioned and stuff, we'll really have to wait and see what really happens there. But yeah, we don't want to over forecast to look too far ahead. We just want to be keeping it plain and simple. If we can get continuation in this area to go long, most likely we probably wouldn't take it because of the news, and it will probably, honestly, it'll probably line up with core inflation rates and so forth. So you'd want to stay out of CPI at that point, regardless of what could happen. Eventually price will be up here by the end of the week, and then we can anticipate the shorts from there. So in terms of future trading, I mean, yeah, price being up here makes a lot of sense. So that's basically it for Euro USD. I know I kind of went a bit long on that, but we can use the same theory now on our other pairs, where we're basically looking at Aussie US dollar. We're basically broken above here. We're now looking for long continuation to the upside. Obviously it can just get a little bit more corrective whilst the Euro USD needs to do what it needs to do in these areas, and then we all go together. So it could just become a larger correction in this area to then move. Once again, New Zealand US dollar, the same thing. So even though I haven't forecasted the shorts on here, the shorts is still something I have in mind, where for any reason we just start selling off and then we start creating continuation, and then we can sell in those areas. Same with Euro USD from that point there. If we do respond from here for any reason, then I'll be ready and fully understand that. But I understand that the bigger picture makes more sense, and it might just be a short AFT in and out, maybe 3, 6, 7%, depending on what actually happens, and just really evaluating the DXY as well, because I think it's just one of those ones where we could just get caught up into lower time frame mess, when in fact we should just be looking at the bigger picture. So I'm not going to waste my time with that too much. I'm going to look for long continuation to then get short in those areas that we spoke about. New Zealand US dollar has the variation off the long and short, but most likely we're looking at the short, because if we go to the high time frame, what do we have? Well, we have the near miss there. We have a little bit of a gap here, which I wouldn't really class as the gap. This is more so the near miss here. We have a strong push, larger correction formulating here to then go long again. So it makes a lot of sense, and it works in line with the DXY, Euro USD, Aussie USD. Just it makes so much sense by understanding that I need to be a bit more patient. But the long continuation here looks very, very interesting. If we can break above these areas, create a small continuation up here, we can go long. Now the nice thing about this is it's got a bit more time on it for it to shape up for Tuesday London session, and then we can probably get in long. And then if we're seeing that on New Zealand US dollar, then most probably Tuesday London session for Euro USD and Aussie USD, we may actually see some sort of level of continuation as well. So I just want you to bear that in mind as well, that a lot of stuff could shape up together around about Tuesday. I think Monday might just be the corrective day, so just be a bit mindful and careful of that. But once again, it could just start impulsing and move significantly away in a day. It's happened to me many times, and it's something you have to kind of learn when it comes to trading, is that you may sit there anticipating a continuation, but it's a part of the game when you realize that it just keeps going without you and there was just no entry. And then what happens is you see it just moving significantly away and there's no entry. And then let's say it's now Friday and you've decided, you know what, I'm going to write this pair off. So you don't put it on watch for the next week. And then what happens is you get a continuation and it meets your criteria, meets your plan. And because you made the simple mistake of just saying, I'm looking for the continuation down here, or I'm looking for it up here, whatever, then you missed that. And because you missed that, let's just say in theory that you did go for an entry over here and you went in with even 15 pips, right? Let's just get that on point. Yeah, even 15 pips, let's just say. And you missed out on a potential 8% trade, which you probably, let's just say, managed to around about, call it around about 7% trade, and that was just blindly because you wrote a pair off too early. So just want you to bear that in mind. I mean, obviously look at this one, right? We have USD Swiss here, where what we've actually done is if I go to the daily quickly, the weekly, we can see that, okay, price near missed that very low there, but we pushed away so much that it's irrelevant at that point, and then we near missed that high there. Now it could just be a part of this whole overall structure where it makes so much sense for this to be the near miss, that to be the near miss. It comes all the way down, fills it, comes all the way back up, fills that, comes back down, and then just sits through the range. Who knows? But really and truly, when we look at it here, we can see impulse correction, impulse correction, impulse correction back into these areas, near missed it, pushed down, corrected, pushed down, and then it's just getting messy, but it looks like a larger correction to the upside, right? However you want to draw it, doesn't really matter. But in many ways, it hasn't really completed. So when you do really look at this now and you're thinking, okay, are we ready to go long? Not necessarily. We could come back down one more time to test these lows to then potentially go long. So when I go into the 4 hour and now I see it declining, does that now become the middle section, right? Where we have that, where it's not the cleanest by all means, but we have this, and then now we're breaking that low, and the DXY is then moving to the downside. So it makes sense naturally to see USD Swiss move to the downside, and then as that moves to the downside with the DXY, it then taps into that area that we are looking at, which then formulates this angle, or if you really want to, you could say that angle. I wouldn't be getting too married to anything, but that becomes the angle. It's a little bit more parallel, and then we have a massive run into the downside there. So if you then get positioned on a continuation pattern here for even 10, let's say 10 pips, easily into that low, you've got around about 12 to 1. So, and then if it does extend and go a little bit further for any reason, it could just turn into quite a big position. But even so, 12 to 1 into that low, you'd probably be at around about 10%, just because, why not? Or aggressively manage at that level, and then basically just see it through. So that's basically what I'm seeing for USD Swiss, and I think it makes a lot of sense when you do cross-correlate it with the other US related pairs and the DXY especially. It's basically giving you a clear message of where we're going. New Zealand CAD is the last one on my top 6 for now, and that one essentially is I'm just looking at this to continue to the upside. So we've tapped into this area low, we've correctively approached it, we pushed up, a bit of a large continuation, but that's completely fine, and now I'm just looking for more continuation to move to the upside. The great thing about this is we do have the near miss there. We filled this liquidity area, and if this was the area where we kind of just tapped in and sold off, we would have gone now, created continuation and moved in sequence, but we didn't. And I think that's the obvious clue that now we've created call it a V shape, and I'll just invert that for a second, where we've tapped into it. What do we know? Well, easily when you do look at it now, I'm not too sure if you did see it just now, but the continuation does look a little bit more clear. But anyway, I'm not too bothered about that. Now I'm just waiting for the next continuation. Now the nice thing about having that large impulse is it
created a bit of liquidity. So even if we did get something a bit smaller, a bit more tight, but on the 1 hour, it would still be enough to then give us a next move before we create something a little bit larger. So I am going to be looking for that continuation pattern to be forming. There could be an abundance of these where they don't really move too far away, but we do create small one after small one after small one, because we have to remember that if I go back and uninvert that, we are coming back into these value areas. So overall move has been quite impulsive, so it would make sense for either this to either come in a little bit more corrective or create a middle section for a 1, 2, 3 into that area, or this doesn't become the area and we're actually looking at a much larger move and we're making our way up to these areas up here. So if that is the case, and then we remove this and we look at it for what it is, then what do we have? Well, we have a 1, we have this middle section here, and then we have this where technically it was filled, but then we've now created the next part to it. So we've come back in, we've retested, and it's now continuing. So then this could actually become something else where it becomes a larger correction into a larger correction, and then we do that, and then we see it more so like this, right? And then that was just a bit more for a running channel. But I'll be honest with you, this is not the pattern I'm looking at. This is not what I really want. I would just be more interested to see how this develops. But even if we saw something like this, where it came up and then it came down eventually at some point, even like that, and then we went up, that would still make sense as well, right? Because we do see stuff like this from time to time where price does do some weird stuff, but once again, I feel like that's a little bit over forecasted, but it still makes sense. So for now, we're just going to keep it very simple and play that as that's now the floor. We're now create the base. We pushed away, and now we're looking for continuation. Very plain and simple. Stay very sharp with this one, because this is where a lot of money can be turned around. Going into the additional pairs, so the additional pairs are a little bit more straightforward. What we can see here on the 4 hour is we have our daily value area just up there. We came in with structure on a 1, 2, 3. We correctively moved away, right? Which kind of gives me a little bit of an indication that we may not be going short. So even though I've got this forecasted as the short, the long is still equally as important. So if we do push higher and we create that, well, it's a no-brainer, I'm going to go long. But for any reason, right, because nothing's perfect, this becomes first continuation, a bit more corrective second, came in, failed, created larger continuation, now broken above, mass psychology has been taken out, we get impulsive price action, pushback and continuation, and we go short. It kind of makes sense, and then we can play the 90% rule of this, where we can get our mechanical management around about there. That's basically how I'm kind of seeing to play it, to then see if we can go long again. But who knows? I mean, it's one of those ones where we just have to kind of take it as it comes, and then see it as, has this evolved now, and is it this? And I think that's a very strong possibility that we have to bear in mind as well. So I'm going to be waiting and seeing how that develops, but EuroCAD's definitely a wild card there. If we do get something that shapes up, that would be brilliant. Aussie CAD, similar scenario with the longs, which I spoke about. Even though that we are coming into this area, we can still move up to those areas above. So I am looking at it on the 4 and seeing how we're created this floor, which we've tested multiple times and failed to reach with near misses, which is fine. And then this angle is not your best angle, but it's still valid. I just want to see it continuously push up, not move too far away from the ray line, come back in with heavy price, and then we get a short continuation into Thursday or even late Wednesday to then go short. Now this could easily be a trade to stay up for early mornings, and that's something that I would keep bear in mind, that, you know, this could shape up around about Aussie session, Asia session, which tends to be the case sometimes. Even if, like, if you look at this candle here, this kind of rejected at around about 6 o'clock. This one was around about New York, but then we had the commitment around about, yeah, New York, late London, and then even from the retrace, New York New York. This is swaps hours as well. But just something to bear in mind, like whenever you're looking at pairs for like Aussie pairs, New Zealand pairs, just look at the times where they commit. Like you can see here, 2 o'clock. So 2 o'clock seems like the banger. What do we have? Do we have any news around about 2 o'clock? We have 1:30 in the morning and 2:30 in the morning. Could be the catalyst for price to move. If so, it doesn't really matter, because what we're not looking at catching it at the high. That's very dangerous. That's re-established. We want to get the confirmation, so we want to wait for that to push back in and go, and that's what I'm going to be waiting for. New Zealand yen. So I didn't really put many yen pairs on, but I did put NJ. And the reason I put that in is because for me, this kind of is a nice value area where it's kind of tapped into now. What we do tend to see is that price doesn't tend to move very far away from their value areas, and then obviously we can see with the JP225 where it is and what could potentially be happening. So I did want to put a yen variation in there, and then if the yen, New Zealand yen, does get that dramatic rejection, and I've got it on watch, I can see it, and then I can cross correlate with all my other yen pairs. So that's what I tend to do sometimes is if something big happens, then I'll look at all the other related pairs before opening a position, although I have done all my homework and analysis on not just the pair that I'm trading, but the pairs as a collective. But then more than likely I'll be cross-correlating them at the right time, but I don't need to have them all on watch to do that. So yeah, what I can basically see is we're correctively in this channel to the upside at the moment. There's no need to take any trades in these areas whatsoever. This can just keep correcting, and then eventually at some point we move to the downside. Now, if this is going to be the higher time frame, high value area, hook point, I'm not looking for price to move too far away. Hence the reason why, if for any reason, price just keeps correcting, and then all of a sudden, boom, price just decides to sell off, and then we get clear deliberate price action, I'll look to get position on that. First continuation is higher risk, of course. Second, third, fourth lowers the risk dramatically. We just need to see how price responds. And then on the daily, this is something as well which I think is extremely important, is you can see how well we're positioned now. Even though we have those indecision bullish candles, you can see that the wicks are getting a bit larger. The weekly on this, if we did get a retrace from up here, it would be stunning, because what's happened is we've closed above, we'd retrace and come all the way back in, and I'd anticipate price to close somewhere down here. So we have more than enough room to protect ourselves in those scenarios, but we really have to wait and see how this shapes up. Honestly, there's a huge amount of variations of what could happen with these yen pairs. More than likely they'll keep extending and moving higher, but if we do get the shorts, so be it. Any trades down here would be extremely low risk and better, but we're probably looking around about 2 weeks ahead from now, because we'd need the weekly confirmation, and then on top of that we'd need to have daily confirmation, 4 hour and so forth. Everything would be in at that point, so that would lower the risk dramatically. You can see on the weekly as well with Euro Aussie, we are coming into that low which we've been waiting for some time. There's been an abundance of trades, and there were some phenomenal positions last week. I think because of where we're positioned, and I was really looking at the 2-touch here, but then when I took a step back and I had a little look at this, I was like, all right, hang on a second. This is in that area where it's about to fulfill its move. So although it can just sell off and tap into it, does it make sense right now for this to just sell off? No. And then when I looked at it on the weekly, I was like, oh, that's interesting. 1 touch, 2 touch. Then I went on the 4. And then it's very easy to get too zoomed in and think it's done everything. You've 1 touch, 2 touch, corrective middle section, comes back up, 1, 2, 3, taps into there. Risk entry is applicable, but you could wait for the push and a flag and then get in short. And then even with a position like this, and this is what I really do like about this pair, and EG is very similar to this scenario as well. Even though I was looking at the EG shorts last week, we will just quickly slap this on there. But even if you got in with around about, I would say 18, 20, but you're getting in there. And even to the low, you're looking at around about 15%. Phenomenal, absolutely phenomenal position. To the low of this flag, you're looking at around about 8. But if you've had that completed and the continuation, you don't even need to worry about that. You're just looking at straight into the low, and that's like 16 to 1. So phenomenal position, just alone, 1 pair, great, all you need. And then you've got the additionals. So looking at the additionals, we can see here on the weekly as well, the DAX does look like it's coming in for that ascending, it's moving to the upside. So the trade that I'm forecasting on here is a little bit more higher risk, but what's happened is we've wicked to / through the point of sale there. This looks like a middle section, and then this looks like the start of a failed continuation to the downside, but a part of the middle section. So originally I was looking at this as the short, which is still possible, but I don't think it's going to be the one that really just keeps going. I think this could get a little bit more messy, and I think truthfully we could actually be looking at a long, not a short, and it just becomes a bit more of a trap. But that's still a variation of what I could potentially anticipate, but I wouldn't take the trade, and this is why. I wanted to keep it on there because then it just keeps the idea fresh. But even so, if it does do that, and then we create something like that and it goes, that just doesn't make sense really. What we really want to be seeing is that, okay, price has failed, it's going to just correctively make its way back up, and then maybe at that point there it comes back in, and then we go. And then what's happened is it's just become a bit of a larger continuation. That's going to have to then just realize that's just a bit of corrective price, create continuation, and we just move higher, and then we've come in with a 1, 2, maybe even this comes in for a 3 touch, who knows. But overall, just to keep this a little bit more simple, I'll just draw it on like that, and then it gives it enough weight to come into the override. And then at the override we can then understand what's going to happen. But then eventually if we do come in here and we look at it on the 4, how does that make sense, right? That makes a lot of sense. So don't get caught up on the lower time frame here thinking that we're just going to go short. Like, there is the possibility, but there's also the massive possibility that this just goes long and it goes a little bit more corrective for a little bit longer before we do it. So overall the DAX looks good, looks very good. Does it need another week? Most probably, but it's very, very possible that we could actually shape up for Friday this week coming up. So Thursday, Friday, we may actually get the trade on a 3 touch, right? And then we go to the upside. So it's kind of more of an additional / additional pair, but overall that's just something to bear in mind. Similar with US 30, and obviously we then tend to see the similarities between the S&P and the DAX and so forth from time to time, and we can see that a lot of these pairs are formulating a similar price pattern, and I think that also adds an additional confluence where we can see that some related pairs are creating the same patterns. Then it gives us that extra confidence in the market that what we are looking at is becoming more and more obvious, and it's going to become a little bit more easier to take advantage of because we have a clear idea of market direction, which I think is an extremely important one for everyone to just kind of understand, that you need to know your market direction before you're entering trades. Otherwise you're just going to be going buy, sell, buy, sell, buy, sell. So establish that market direction, the range from A to B where we're moving to, the potential price points we could pivot from, map them all out, and then realize, okay, what's higher probable, how can I take the run, and then we take it from there. But what we're looking at over here is an ascending channel. This has become a very corrective middle section, and now we've just created an expanding continuation here, which is phenomenal. If I just go back to the 4 quickly, and you can see here that price actually then rejected with 2 pin bars. Oh, sorry, a pin bar, bullish pin bar there. You look at it on the hourly, and you can see here that it doesn't look so clean, but the structure is there. 1, 2, 3, expanding 1, 2, third is not yet tapped into, and we're making our way there. Just going back to the daily, you can see that on the daily it just doesn't look clean. It's very wicky, very messy, and I assume price is just going to continue in that nature because it's just doing it. It's been doing it for some time. We don't always have price action like that. Sometimes we do have things a little bit more cleaner, but hey, we can't pick and choose everything. So if we are taking a trade on here, essentially we're kind of good to go from here now. This could maybe even dip in one more time before we go higher because of how weirdly choppy it is, but I'll be honest with you, more than likely you're probably going to see something like that, and then price just goes, and then you're just sitting here like, I didn't know what I was waiting for. So once that goes, you could look for something like this on a smaller degree. So I would anticipate looking for the next continuation, I wouldn't just be jumping into a trade because you're just asking for a quick loss. You could just wait patiently for something like that, which honestly is possible. Even sometimes you can get it up here, and basically this move completes. Take that, completes, then comes into its next area there, breaks above here, creates the next continuation, and then we move. And I think that's pretty nice. It's actually really nice to see something like that. You know, even if we did see it like this, where I know it's not the same, but you know, you get price action like that, and even now, if we're in this area and we create continuation here, that would be deliberate enough for you to then take that. But it would require a different level of skill of just how much I've studied the US 30 and so forth. If you were to get that, it's higher risk, but because it's within this and it's completed with a 1, 2, 3, and then you're getting that area there, you could then take the volume off that, because then that's the accumulation of this whole flag formulating into that one little piece price there, and you can go long. So I would just keep that on the charts there, just so I've got a double reference off that. But yeah, absolutely. So that would basically be it, where we then create a continuation there. Gold. I know a lot of people are interested in gold. Now I've put my ray line here for a particular reason, because for me that's really the line in the sand. Continuation above that ray line, we're still looking at longs, but anything below down here is a little bit more higher risk. But if we can kind of break these lows, it lowers the risk dramatically for future shorts. But when you do look at this as a whole, you can see that 1, 2 corrective middle section, and now we're going off for the long. So what makes sense? The long makes a lot more sense. So the short forecast is just there for your views, so you can see what would be needed for it to go short. But because of how we're seeing this as the overall picture, I wouldn't get put off because it's just broken above or whatever, and you think it's going to break back in. Like, that is possible, but I think the most important thing now is to understand that if this is going to be an ending structure, this might become a little bit more large. And I'll be honest with you, because of the news and everything we have lined up, most likely we're not going to get this large pattern right now. We're probably going to impulse, and this is just going to continue breaking the high and go. And then you zoom out on the high time frame and you look at it and you're like, okay, hang on a second, wait, what are we seeing? We're seeing, I'll just do this quickly, massive impulse, right? And then you have the larger continuation. You take that from the break, it has a long way to go. Take it from the bottom, it still has a fairly long way to go, right? And then if you apply the same method, right, and I'll do that again, where we take the low, put it over here, and we take that from the top to bottom, still has a fairly long way to go. But then if we take from here, what's happened to it? It's completed this move and now it's created continuation. Or you could argue it's a reversal, but what we're reversing from, there's nothing to the left. So more than likely, what we're really looking at is this move here. This, then coming in from the break, we're still targeting those areas there. So what is this then? Well, we have, and how is price moving in sequence? Well, we can see that we have impulse, correction, continuation, and then on the larger degree we have a huge larger impulse, correction, larger impulse, right? So it makes sense naturally to be looking for longs, even though it's so easy to get caught up in this and being like, oh my god, high value areas, overextended, blah 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 blah. Yeah, okay, some of that is true, but overall when you look at the bigger picture, we're very cheap. So the message has always been there. The message has always been there, saying that price is extremely cheap, and you getting caught up in the low price action here is just your own fault. Because the bigger picture, if you could understand it well enough and you had the technical ability to break that down, you'd see that price is actually future value or current value is supposed to be around about this 2,800 per an ounce, but we just haven't moved there yet. So that's one of the interesting things. And then it makes me think about futures, because really and truly, when you think about trading, you're trading the future price of something. You're not trading the current price, you're trading where price is going. So when you do think about this,
how can I get positioned to get into that future price? Well, these are it, and I think adopting that mindset will help you get into very high quality positions, rather than trying to get in and out of these scalps, which I've done a lot of, and I think it's a complete waste of time, and you could trade a lot better. Like, you understand the high time frame picture, you take a position like that, you then break these highs and you're moving. Are you really going to close that? Maybe on CFDs, maybe not on physical or on other things, but just something to bear in mind. But moving on to the last one off my extras here is oil. Now, once again, oil is on its way to the upside. We can clearly see that we have value area up here. First correction was tapped into over there, and then we just randomly rejected from this section here. And then we came in, there was a hook point there, we've come up, and now we're kind of just squeezing into it. Now, am I completely bought on shorts? Not really. Am I completely bought on longs? Not really. But price has been corrective and kind of stuck in these areas for quite some time. So it's very possible that we could just extend and move to these areas up here, which could be, you know, in the 99 whatever areas. But what I really think is going to happen is we're just going to kind of create a larger flag in these areas. So I'm looking to potentially play a range in here. And what I would like to see is, does this become a part of something? I'm not too sure if that's going to be the real gameplay, but it's still a possibility that we could see then we get enough momentum to then do this, where if we take that to that point there, we take it even from the low, we still get enough momentum to come into the override and so forth. So it's just something that I was just kind of looking at and thinking, could there be a trade in there? So that's why I'm just anticipating that. Do we come into this hook point here with a 1, 2, 3? We reject, get a low risk entry for shorts. Then we come back into these areas. Not the best in the world. Obviously, you might get the hover. You could even get the risk entry. There's a few variations of what you could take. But then even if I can get in with 20 pips to that low, there's around about 12 to 1. So listen, at the end of the day, like, I don't care about getting into the higher risk and whatnot position. I just want to lower my risk as much as possible, get in and out, take a 12 to 1, move on to the next one and not give too much back to the market. Just going to quickly skip through my forex pairs that I didn't put on watch. So Aussie Swiss, there is the possibility for a large continuation, 1, 2, 3 back into this area to then go long. I think that makes sense, but once again, I'm not a huge fan of these Swiss pairs, and yeah, I'd rather put something else on watch, so that's what I did. Almost put it on watch, but then I realized I didn't want it. Aussie Yen's overextended above these areas. Yeah, there's the possibility you could short. I think we just need to wait for a clear message from the market. There is this little point to the left here that I wouldn't be too bothered about, because that is from 91. Doesn't really matter, to be honest. Like, yeah, you could tap into it and then sell, like, so be it. And then we get continuations, and then the real sells really come in, and then you're getting involved on some banging trades. So right now you just want to wait for solid commitment on these pairs for it to just push back in. Aussie New Zealand, I'll be honest with you, man, as GN and EN look way better than AN, but yeah, you got this value area here, but honestly, I think you just wipe that off and wait for it. Like, it's just larger correction. It is building up the momentum to the downside. So if you're going to be looking at all these areas, just look for that one area here. Let price do its thing. Right now you can see clear as day. What is it doing? It's coming in like this. So what's the odds that it gets there right now? Probably quite low. And what might actually possibly happen is we sell off, we do this, we move higher, and we come in there, and then we've created this section, this middle section to the 1, 2, 3 to the upside, and we've done that basically. And I wouldn't be surprised with that, right, where we push up, and then at that point there you can then say, okay, well, that's done what it needs to do, is come back in, continuations, and then it's just going, right? And where would you want to be positioned on that? Well, clearly we want to be positioned in here, in these areas for the shorts, because we can see that there's a massive run to be made, because we also have this on the higher time frame where we've got the section 1 middle section, take it from the break, you know,
it brings you even further out of that structure into pretty much no man's land. But as we know, with this, there's a huge amount of accumulation here. This is a huge consolidation right now, and what we know about huge consolidations is they require a huge amount of patience. So we have to take our time and wait for that. But as you can see, there's plenty of opportunity. There's an abundance of opportunity across the board with a lot of these pairs. Just need to be waiting patiently. But if we can get that, because we're getting an impulse, probably larger correction now, comes back in, taps into that liquidity, takes it out, catches people out on the wrong side. Mass psychology has been taken out. They're confused, pushes back in, continuation, deliberate, pushes down, hover, continuation there, a little bit larger, and then boom, it goes, and there's going to be so much time to take advantage of it. It does look like it's going to be an August time situation. Could you take advantage of the long? Yeah. Could you be more patient to take the shorts? Absolutely. But then again, if it does just impulse and gets there, which it can do in July, then we might be in for a serious treat. So I would bear that in mind, that price doesn't have to do all of this. It can just literally just push its way up, get there impulsively, pushes up a little bit further than expected, and then push back in, or continues to go to the upside and does something completely different to what we're forecasting. At the end of the day, we're not here to dictate if it's gonna completely play to structure. We just want to be looking at where can we get positioned for the long or short. CAD Swiss, didn't really care much for this one, I'll be honest with you. It's not really my go-to. It's just in the middle of all of this. It did respond to that sort of section there, where what I would be looking for is maybe even if it did this, comes back in, maybe gets a little bit more messy, and then comes in, does that, and then sells. That's probably what I'll be looking for if I was going to be taking a trade like that. But yeah, man, forget this pair. I just deleted it. Kajen, similar situation, but you know, right now it's just clear message from the market. You know, what you're trading just that area there. The real deal is up here, and we didn't respond to these areas. Like we failed to commit to the downside. It kind of gave us a message, didn't, and now look, it's just continuing. So simple message, just be patient, look for long continuations. Just keep looking for long continuations until the market gets very, very clear. Obviously the JP225 is not positioned in your most ideal point right now, but if it does extend and goes further, then you could bet your bucks that you're just going to see opportunity after opportunity presenting itself, and it's just going to keep going. But I think as we get closer and closer, this pair is notorious for extensions, so you could get positioned so well on a lot of these pairs. Just take your time and really analyze it, and then if something shapes up, take it, because there is a huge amount of time there. But because of where the JP225 is positioned right now, just be a little bit cautious, because if you're not in a position to take it, you could take slippage or something as well. Like price could just dip on you, and you need to be careful with situations like that. So going into the next one, which is Swiss yen. Swiss yen just extends into the middle of nowhere, so I'll be honest with you, like, I wouldn't be surprised if that just keeps going. I'm not gonna even entertain a trade on here for a while. Probably not until the yen pairs all turn around together. But yeah, don't be surprised if, you know, something like this shapes up, and then, you know, it does something like this, and then it just keeps going. These yen pairs, man, trust me, they got momentum. They got a huge amount of momentum, a lot to learn on them as well. This is Euro GBP, which I almost filtered on, but then for obvious reasons I didn't. What you can see here is that, okay, price is corrective. Great, we've already established that. We've broken the low, we gapped, which is nice. We filled the gap, but then when we started coming back in, it did come in a little bit more corrective. So then when I evolved this, rather than looking at it as an internal 1, 2, 3, and then coming into the gap as the hook point, etc., I kind of realized that this could be a larger flag. So what could happen is this could get a little bit more corrective, and for whatever reason, if it does that and it comes into these areas and then I evolve it, then this could come into a 1, 2, 3 to then get another short. So that's what I'm going to be looking for, but I don't think that will be ready till next week, so I'll leave that be. But all in all, what I originally was looking at was this section here, and then basically you had the continuation in that area, short from there and go look short. But I think this looks like a much better forecast now. and I'm going to wait for that. So we'll see how that shapes up. Euro Swiss. So I did have that Euro Swiss short. It would have run me around about 10.33%. But in the end, it's fine now. It looks like it is creating larger continuation to continue to the upside. So in terms of what you'd be waiting for is probably use, and I'll remove that because it doesn't need to be on there anymore. I'd use this little point over here, and it'll probably come back in, tap into that, maybe even near miss it, come back up, and then you get something like that and you go long. Maybe even it drips through a bit, but that's basically what I'll be looking for. Could even turn into an expanding as such, but yeah, that's basically it for Euro Swiss. EJ for the long, once again, it's so close to the value area, I wouldn't be surprised if we just tapped it and it sold, but again, you know, that's just one point, and then you have that point just above, and then when you look at a pair like CJ, you can see that, okay, if CJ's got a bit of a run ahead of it, perhaps maybe that's the bit of the run ahead for EJ. Euro New Zealand, yeah, likewise, you know, it's just, you could get a bit forced into some of these trades. You can see even away it's pushing away correctively right now. It's not your ideal situation. Like if it was going to be the one, I would want to see this clear push away, continuation, and go. Like that's essentially what I want to be seeing when I get into a trade, right? I want to see that, okay, we've tapped into it, we pushed away, I'm able to manage that well, we get clear continuation, potential scaling, I can get in for the next trade. But when you tend to see stuff like this, it tends to not be what you think it is, and then we start to kind of just establish that, okay, maybe we were wrong, and then we keep looking at the next point, and next thing you know, you miss all the longs. And then there was one simple piece of information there where it was like, okay, well, we filled this area of liquidity, we near missed this low, but we pushed away massively and aggressively, and now if we get continuation in this area, right, we're good for longs. Very, very simple observation there, where you can see from the higher time frame perspective, that doesn't look like your shorting pattern. That looks like a bullish continuation, right? And then it just responded from the override, and maybe eventually it will come back in eventually at some point to fill that before it goes. But like I said, don't get too sucked into some of these trades, because you could be looking for something that may not come. But yeah, so long continuation on EN. GA needs some time, but it looks like if I just go to the 4 hour quickly, you can see here that, okay, we have that area there. It does look like we're creating a 1-2 potential drop off, third touch, push back in, insurance entry, we go long. If you look at it from the higher time frame where I go to the daily, you can see that, what do we have? We have impulse, huge extended continuation where this kind of feels like it's going to come back in and fill the low. But even so, we have this low meets with this low, we come in with a 1, 2, 3, and then we push up insurance entry, and potentially we have a move into these areas up here. But we are within that larger correction, so expect GA to be messy, because when GA is in these periods, it's not always the cleanest, it's not always the easiest to decipher, not always the easiest to trade. But what we do know is it does respond to structure, so we can trade it. We just need to lower our risk as much as possible, hence the I. Again, GU is looking like it's going long. We responded to this area here, we tapped into it, mini double bottomed, we double bottomed, and then we mini double bottomed in it as well, which is interesting, and then we pushed away aggressively, which is nice. Clear message from the market, we're not looking for shorts. So again, when we're looking at something like EU and so forth, we have to ask ourselves, are we actually going short right now? No, not at all. We just look for continuation. So similar situation, this one could have easily be filled on. In fact, I might just move it on to watch, where I'd be looking at something like that, and I'll just remove this because it's not needed, but I can put it on here to see what it responded to. And then yeah, you can see here you had that, and then this one just kind of near missed, but it was more than enough. But I'll put that on watch for sure. because as a variation I have some space, but I can then size them all up and look at them together. But most likely GU and EU, they look like they're the beasts, really and truly. I do prefer GU actually over the rest. Not quite sure why I didn't filter on earlier, but looks good. And we can see here GC, not really my preferred pair. I think it needs some time with some development. Even though it's broken now, it's now coming back in, it could just do a whole bunch of stuff. It could even create a 3-touch like this. This kind of looks like it could be probable, and it does that. And then in here you just tend to find yourself in something like this, and then it just continues higher. I mean, like I said, there's a whole bunch of variations of what could happen with this particular pair, but long continuation makes sense. Zoom out, have a little look. Strong push away, corrective squeeze. There's no sign of a retrace just yet. We've broken above that little hook point, so it seems like we're not responding to shorts there. If we're going to continue, most likely we're just going to keep going up. What would have been nice if we did have price action like this, I'll be honest with you, but we don't. We don't have that clear as day price action. But what we can see is that most likely, if we do dip, we could dip back into those areas as well, which weirdly enough was very similar to how price moved there, just in a very different way. So yeah, I mean, I'm not like fascinated with this pair at all. Like last week, it was looking good for shorts. Overall, I thought it was looking nice. Like we responded, push, structure, push. But now with how it's just decided to not do what it needs to do, I'll be honest with you, I'm put off with the pair. And it's so funny that something like that could happen, where you could be kind of married to a pair and be like, yeah, this is the one. This is incredible. And then all of a sudden, little bit of price changes, and then boom, you're no longer interested in the pair whatsoever. And I find that hilarious because it's happened a few times. But yeah, overall, could see something like this where continuation moves higher. Obviously, it makes it a little bit more high risk. You'd want to wait for an insurance entry on that as well, because what we've really done is we've technically responded to the hook point then. This one over there responded to this, and then it looks like we're declining, so it'd be a very subjective trade in my opinion at that point. But anyway, overall, move on. GC, F, HC, F, CHF. Yeah, not interested in that at all as well. You can just see the awkwardness of price. Not your typical, obviously shorts look good, but yeah, shorting, it still looks like we're in a shorting squeeze. Overall, if you wanted to take this, I would say just yeah, look at the squeeze, man. Really, just look at the squeeze. Go on the 4-hour quickly. Most probably we're coming corrective. Yeah. I can see what we're looking at now if I go to the daily. Most likely it's going to just sell off a bit before it comes in, but yeah, probably get something like that. Comes into this trend line, and then we sell off again, and then we go, and it's just going to do that. I mean, I've studied these sort of corrective channel squeezes and stuff, and I'll be honest with you, you can too, but it's not really necessary right now to really just be trying to take a trade, because what you tend to see is that, and these are brilliant trades, I'll be honest with you, phenomenal trades where you get that corrective, taps in. Now we can kind of get the angle off the channel. We can see that we've tapped in, created 2 bottoms, 2 tops, corrective here, come back in, kind of left an override there, taps in, maybe the channel extends a little bit, it comes back in, insurance entry, and you go short. So there is actually a very strategic, smart trend line play here, but it's not the one for me, to be honest. I'll wait for some clear structural plays and that. But yeah, just something to bear in mind. GJ as well, you can see, similar to how we looked at EJ and CAD Yen, is just extending into a next value area. So you could look for long plays. Truthfully, there was a nice one here as well. 1, 2, 3. It's just, if
I was just put off by the JP225, so I left it. And then I have the GPB, GBB, GBP, New Zealand. Again, I think this is ready for shorts. It's done everything it needs to in that area if we are ready to go. It does look like we're in a massive correction to move higher, but because we're below the low, it's interesting. If you look at it for what it is, and I studied this on Aussie New Zealand, which was in the last video, you can see that your entry point would have been around about here, and you would have just been taken out and it sold off again. So simple, easy observation on a tactic to take in GBP and Aussie, Euro, New Zealand is you can set the pending order in here for where you would have entered the market and stops above, and majority of the time you'd actually probably survive it, but you'd have to really understand your technicals and where the positioning and where the key entries are and whatnot. But yeah, like I said, it's one of those very high risk type of way of trading as well, and yeah, it just feels like you're blindly trading. I think if you get so used to it and you trade like that a lot, where you I think SMC traders trade like that as well, where they just kind of set the order in an area and then they play the zone or something. You could probably do that. Just take that one little piece of information, and I promise you, like, you could probably make some decent capital getting into some good positions. A few break evens here and there, but it definitely works because I've tested it quite a lot now. But overall, I think the best thing for me now is wait for a continuation. I'm probably not going to get that on GN, so I'm not too fussed, but that's basically it there. Yeah, GN, had to let that one slide. You know, it's funny because I was looking at it and I was ready to pull the trigger and I didn't, because I just wasn't too sure. But then looking back on it, I was like, nah, I'm definitely sure I should have. New Zealand Swiss, this one was quite messy, so I left it. I don't think there's a New Zealand Swiss trade there for me, so I wasn't very interested in that. And then I had USD CAD, and USD CAD was basically on its way down, so really and truly I'm not very interested in this pair either because it's still developing. So I think it needs a bit more time until it taps into those areas before we even see anything. But you can see it from a high time frame perspective, which is nice that we are, well, we've pushed up correctively. This is overall just a massive corrective squeeze to the upside, but it's kind of just moved impulse correction as a running channel, pushed up again, and then this has now become a larger correction, and then you pattern separate that and it looks like it is coming to the upside, but we just need to wait for that liquidity to be tapped into there, see what happens. If we respond, push up, continuation, then we can see here that this just becomes a part of a larger structure to the upside. But USD CAD I wouldn't even touch it. I think it's just so messy. You can get caught into lower time frame price action, and there's much better things that you'd want to get caught into opposed to something like this. USD Swiss, so I covered that. USD Yen, USD Yen, USD Yen, USD Yen. I don't really like USD Yen at all, to be honest. Now, with the DXY, how it's looking, obviously short to go long, we could probably see something similar on here where it goes short, catches everyone on the wrong side, creates a long continuation and just moves up higher. Obviously, it makes sense, but at the same time, it's like, how have we got there? Well, we're just squeezing. And one thing I do know about these pairs is you don't want to trade during a squeeze. So I would leave that one. Even though actually I'll go back to the lower time frame. It's actually quite interesting here. You can see if you look at it, you've had this bit more steep one, and then you had this one right here, right, which is quite interesting as well when you do think about it, because it did start to give you the feeling that we were going to sell, and then if NFP came out and we did sell, that would have been a different story, but we didn't have that. So anyway, this is a clear clue with that corrective squeeze to the downside that we are moving to the upside, but we might do something similar with USD, the DXY, where we just kind of drop off and then we pull back in, continuation, move to the upside. And then USD ZAR, not too interested in that, to be honest, at all, so I'm going to leave that one out. Indices, SPX is just continuing to the upside, phenomenal as we looked at it earlier. JP225, as mentioned, and then Aussie 200. Now this one's interesting because it does look like it's pushed up, continuation to move to the upside. Not the most favorable for this, but when you look in the 1 hour, there was an entry in there on that as well to then go long. So we'd have to wait and see the DAX, as we mentioned, and then US 100. Honestly, it's a tricky one because we had the elections and stuff, which didn't really take any impulsive effect, but it just caused price to move up even further without giving us any corrective continuation. And at the end of the day, this is just a bit messy, so I would just take a step back and realize that, hang on, we are moving to the downside in the sense of 1, 2, 3, push down, large correction, etc. So it's better for me to just wait patiently to see what happens, and then if it does what it needs to do, it does this, and then it moves up, taps into that and maybe sells, cool. And then what we can see here is that we actually ended up developing and doing that. So I think if a matter of patience will actually reveal what we're really looking at here, and I think that's required. And I think US 100, likewise with the US 500, it's just moving to the upside, so we don't need to worry too much about it. But US 30 could be the gem on that. And then we've got gold, I think as we mentioned, this one, and then silver. Silver's an interesting one too, because we had that massive corrective squeeze in the downside, which also increases the probability for this to move to the upside. Continuation, similar with EU, we get that continuation across both of these, and then we move to the upside, and then we move there. But then even if we go to the weekly, just to kind of cross correlate what we saw with gold, because silver and gold do tend to move in correlation a lot of the time, is if you take it from here, we still have quite a move ahead of us. And if you take it from the break, call it here, you know, silver's quite cheap per an ounce as well. I think it's measured in ounces, but overall, very cheap. So yeah, I will keep a very close eye on that for silver longs, because I think silver longs could be a hidden gem. Same with gold gems. We'll wait and see. Natural gas, I don't really have that available on my platforms, so I missed a lot of trades on this, but there was so many little interesting trades in there. Over here, and then over here. It was a bit more steep one, but anyway, I could have capitalized quite a bit on that. Just anyway, I covered WTI, palladium. Spreads are usually quite large on this, but we're kind of in a correction phase here. I wouldn't really want to be trading into from that high. Just want to wait and see what happens, because right now we want to see how we respond to this. But likelihood is we either push down insurance entry and go short and we fill that low, or we continue higher and then we tap into the next most relevant areas, which is here, and then we see how price responds from that. But more than likely, I think I'll just be keeping my attention on that to then look for shorts. Platinum, so platinum shorts was on the table, but now we're looking at platinum just basically doing what platinum needs to do, and I think right now I'm just not interested in it. I was looking at something like this, but then the angle was just a little bit off for me. I think it just needs a little bit more time, but definitely platinum does look very interesting, I'll be honest with you, when you look at it from this perspective. Hang on, I'm just going to move that over there. Yeah, and then you look at it on the 15, and we seem to be responding fairly well, to be honest. Possible, and we've retested that. I think platinum could be a hidden gem. Platinum could be a hidden gem. Very interesting. Yeah, I'll reanalyze that one. I'll come back and look at it. But nevertheless, copper coming into those areas for potential tap in, tap off. Coffee. Oh yeah, I've added in these ones because now I have the new FTMO account. You can trade these, which is interesting. I actually also have stocks, but I'll go into that later. Then we can see here, this one's interesting, cocoa. I was looking for the potential short, but anyway, it was Friday and didn't want to hold on to it. I think what could potentially happen over here is we could tap into this and then probably come in for a sell if we are going to sell. It can still sell from where it is because we do have the potential for this being that, and then we get low here. I'm not really favorable for that right now. I just want to see how price responds to this overall structure as a observational learning point. And then we have corn, where corn does look like it's creating continuation, but because where it's positioned, I'm going to leave it. Wheat actually gave us a running channel. So we came in with the 3 touch,
we rejected, but we came in corrective, and now we're pushing to the upside. So this makes sense for more long potential. Obviously we have the near miss to the low there, but if we do push up higher, create something like that, it's a no-brainer. We're going to look to go long and potentially see this turnaround and then keep that near miss in play and eventually come back for it, just understanding that long continuations would be high risk. And then soybean could go short, to be honest. What I did see about this was you take that as your low off that larger correction, and then we're basically trading in that area now. We've then retested it with a 2-touch here, and then we just need to see how price responds. And it looks like we could, and I'll just remove that because we can see where it's responding from, and I'll tap that in here. Sorry about that, just trying to get it perfect. And then I'll go into the 5, and then we can see that, okay, price is still in this area, but what I do want to see is, okay, price has responded to this, pushes down, creates a next continuation here. And then we can see that price is good for the shorts. And I think that's pretty much how I would look to play soybean, although even if it's still trading into that low, this could develop into, you know, something a little bit more complex, could even push up a little bit more before it comes in. I don't care, to be honest. I'm just going to be waiting to see how that responds, but I'm not putting soybean on watch, just something that I'll be observing. BTC looks incredible. So what we have over here is oops, I think I've over forecasted on this. On this one, okay, it doesn't really matter. So you have this section here, we rejected, go to the 4, we've pushed back in, continuation, look at it on the 1 hour, and it looks very interesting. I think if you look at it on the line chart, it would probably look a bit better, but you can see here structurally it looks nice. Go to the 4, you can see over there 1, 2, 3. That's why I'm kind of favorable for BTC longs now. I think BTC longs makes a huge amount of sense at this point, where if we can just get that momentum kick in, we'll go. We need to wait a little bit more, but I think there's more than enough for you to take a high risk position in these areas to then go long, and then this goes. But yeah, BTC longs look amazing. And then these are the stocks that I spoke about. So I just chose to put these ones on. So I've got NVIDIA for a long, because you can see, and obviously the way I see it is as well, these are extremely cheap again. But you can see from flag to pole, impulse correction, you know, we're anticipating price to move up to these areas, but we just want to make for something clear, deliberate price action. But you can see it does respect structure pretty well, so that's going to be an interesting one, actually, trading stocks in that, because I haven't traded them in years, so that'll be quite good. Microsoft, I think Microsoft's just notoriously a bullish pair, so probably we'd see less of that. We might see something like this, and then it just continues. You know, it could just keep going without coming into those areas, so just something to bear in mind. And Amazon, I think what I'm going to be doing with these ones is obviously definitely going to be looking at it from a zoomed perspective out here, and then just waiting for deliberate clear price action before I take any positions. Same with Amazon. Amazon looks pretty good for longs as well. Definitely undervalued again. Microsoft undervalued. NVIDIA super undervalued. Longs make a lot of sense. Apple, long continuation makes sense as well. What I was looking at over here was, we have this, so there was the potential for it to come in for a third, didn't. But just looking at those observations and those scoops, the commonalities in this particular pair, and yeah, just overall we can see that there's huge upside potential in this. Google, likewise, massive upside potential, super undervalued again for good reason, so we can make more money. Let's see. Yeah, you can see where that is coming into that trend line over here. So it's, even though it's really pushing up higher and it doesn't really need to respond to that just yet, we could still see something like this where then price just gets corrected, comes into the low of the trend line and moves higher. Something similar to what we saw here. I don't really care much. I just say it's not the best time to get into Google just yet, but really the truth behind it is there's no better time than now. Barber, I'm not interested in Barber. Tesla, I am fairly interested in this because of how bullish it is, and it's funny because I was watching it last week and it seems like last week was probably the most bullish week I've seen it in a very long time, to be honest. So I definitely looked at it at the right time and put these on study for a good reason. But yeah, so that's really moving to the upside. I definitely think there's probably some now trades situation in there because of where it's moving to. It's nice because when I'm looking at it on the weekend, it feels a lot more clear, and I think it's a perfect time to do more studying. But what you can see is impulse, correction, gap, impulse, correction, gap, impulse, correction, probably another gap, and now we're back in the high value area. Very, very cool. You know, it doesn't fill these gaps much as well, so we can see that, but this gap didn't get filled. Do we come back up, sell off? Who knows? I don't know much about Tesla, and I don't really care much for it, to be honest. I just know that we're moving in sequence, so the next sequence will be the impulsive phase, and that's where I'll be looking to get involved. Meta, another banging position, to be honest. So, oh, that's a nice color. Interesting. It's white 57. Let me compare that. Oh, I might have to change it. I might have to go back to white 57. Yep, I'm changing my trend line color to white 57. Sick, I love that. Alright, yeah, so you can see impulse correction continuation. The nice thing is we've broken the high value area, and well, usually when these things happen, we want to see it go. We want to see us really significantly move away because we've broken it now. So do we get something like that before we go? Possibly. Or do we just continue going? And then, you know, we just have to wait and see what happens there. BAC, Bank of America. Just realized it's Bank of America. I thought it was British Airways or something. Yeah, Bank of America is not doing too good. Not too bad, sorry. Corrective squeeze. Interesting one, to be honest. More upside potential, to be honest. Probably coming into that value area now. So yeah, looks good. Ferrari, is that Ferrari? Yeah, it is Ferrari. Shit, Ferrari's doing phenomenal. What the hell? Shit, I never realized how nice this is. Despite impulse correction, tighter correction. Ugh. Yeah, that gap in is it's not the one. But I think this has done enough. I think this is, well, yeah, this looks weird. It feels like I don't know what I'm trading. I have to look at it on a week to week perspective. I don't know, not into Ferrari, but it looks good. T, which is AT&T, nope. Yeah, V was interesting. So this is Visa, where you got 1, 2, 3. I think Visa's going to pump, right? Because I was looking at this right from summer periods, and it tends to go higher during the summer periods. So people are generally spending more, except in 2018, but people tend to be spending a lot more and using Visa a lot more, so I think they make a lot more money during those periods. Perhaps maybe just a small observation, but there's a lot of interesting stuff happening over the summer period when you do study the summer periods. So a lot of accumulation here. I think Visa is actually a gem. Visa might be a very hidden gem because technically, get rid of that green one. Difficult to fully decipher on there, but look at it on the weekly. Yeah, I'm happy with that, man. I'm looking for a Visa long. If I get Visa long here and I put that in with, call it 10 pips. 10 pips seems a bit too tight. I'll go 12 just to be extra safe. Yeah, it doesn't really move significant amounts week on week as well, so scrap that. I'll go 4 hour. And do we get much continuation patterns? Yeah, interesting. I'll wait for something. If we come back into this area here, it seems like 2 touches is a thing, but if we get that, I'll go long on that. I'm just gonna try. I'm not gonna change the way I trade. I'm just gonna take it as an insurance entry, and if I get that, yeah, so be it. What about 15? Oh, 15 did have a flag actually. Yeah, Visa. Let's have a little look. I'll mark it up anyway. We'll see. Pfizer. I don't want to support Pfizer, but it is what it is. Yeah, I'm not interested in Pfizer. There is actually a flag in here though, but nope, because of where it's positioned. Leave that. Walmart. Oh wow, Walmart did move. Really, truly. Walmart is it's a fascinating one, to be honest. I don't know much about the company. I just know about the CEO and very smart, intelligent person who taught me a lot about humility from just understanding his story. But yeah, Walmart's looking phenomenal. I think again, summer periods. It's been pretty. What if I zoom out a little bit, squeeze that? Yeah, Walmart's a gem, but how am I going to get positioned on that? It feels like the real positioning is gone. Which, would I have seen this? Maybe I would have seen that, but there was one little tight one there. Oh, interesting. Yeah, there could be a lot of trades. I mean, we'll have to wait over the week, see how that shapes up, and we'll keep an eye on that. And then we've got Zoom. Oh, hang on a second. Let's have a little look at this. So I have point A to B, and then if I take it from there to there, there's still a little bit of a run left, and there, yeah, no, it's okay. It's not much, to be honest. Zoom, this is the one I wanted to actually cover. Now this is interesting. This is what first triggered my interest when it came to looking at these, because this is where I understood that we do actually respond to structure very, very well. So disregard everything for a second, but just look at this. So we have the low here, right? And then on the daily, we can see we had that follow through from that correction. So we were moving in impulse, correction, impulse. And then what do we have next? Phase is at the low. We then had this, where even if you took it from there, you then had this. So then I was like, okay, that's interesting. So we have a 1, 2, 3. Then I looked at it on the 15, and I was like, oh, even more interesting. We have the internal squeeze, right? And then we had this as well. And then we go in again. I'm joking, but it's basically it. You can see what I'm talking about, right? Where price is actually pretty interesting. And I mean, for Zoom, the reason why I stayed out was actually very stupid. In my mind, I was thinking, oh, they've just released new features for their platform, so maybe they're not going to go short. But that was just a very weird thought that kept me out. But then again, you can see where we're trading, we've actually broken all-time lows, created continuation. Now we're moving to the downside. Phenomenal. I just thought, how much lower could it really go, right? But I don't think we should ever be in a position where we start dictating things like that. I think even if we're trading at 43 and we're saying, you know, whatever, and it goes down to 38, so what? It goes down to 31, right? There's so much room for this to move. It doesn't have to be at these areas. I mean, last time I was at this area was in 2019. So personally, Zoom is very, very cheap right now, and I'm not too sure why it didn't move. It didn't significantly stay high, but after COVID and stuff, yeah, it just declined. So it is what it is. But guys, look, it's been a pretty long video and I hope you found a lot of value from this. If you have any questions or anything, please drop a comment below. And yeah, overall this is the watch list and the pairs for the week. Obviously, like I mentioned, I've got a few stocks that I'll be monitoring and studying throughout the week as well, so maybe I'll make a few videos on that. There's only a fine line selected few because it's the ones that the broker is allowing me to trade. But all in all, guys, have a great week and I'll catch you guys in the next one.